Hey everyone, and welcome back to the channel. Today, we diving deep into an investment topic that has sparked a lot of discussion and curiosity online. The Iraqi Dinar, or IQD. You might have heard whispers or even loud shouts about this being a once-in-a-lifetime opportunity to get rich quick by buying diners now, waiting for a massive revaluation and cashing out for huge profits. Sounds tempting, right? But what do the financial experts and regulators really say about it? Is this investment truly safe, or is there more to the story? Let's take an honest look at the promise, the realities, and the risks involved. The allure of buying Iraqi diners often comes from a compelling story. Iraq, with its vast oil reserves, is rebuilding after years of conflict. If its economy recovers and the currency is revalued by the government, then early holders of IQD could see significant gains. Some enthusiastic promoters even claim the dinar will suddenly be worth several US dollars, turning modest investments into windfalls. It's easy to see why this idea has captivated many DIY investors for years. The dream of getting in early while the price is low and then benefiting big time. However, when we turn to financial experts and regulators, a different picture emerges. The first thing they will tell you is that the IQD isn't freely traded on major global foreign exchange markets. Its exchange rate is largely managed by the Central Bank of Iraq, not by free market forces. This means that even if Iraq's economy improves, the dinar might not appreciate much unless the CBI decides to change its policy. Regulators in various countries have also issued strong warnings. They classify buying IQD as high risk, often linked to speculative schemes and unproven revaluation promises. In some cases, companies selling diners have even faced legal action for misleading claims and false promises. So, what's the realistic potential for return? Analysts suggest that because of the fixed-rate environment, low global liquidity, and heavy reliance on oil, any upside for the IQD is likely to be modest at best, not dramatic. Many view it as highly speculative. Let's break down some key risks and realities. First, liquidity and accessibility. Because the IQD isn't widely traded internationally, many investors, especially outside Iraq, could find it really hard to sell their holdings. Some banks just won't deal with it. If you can't easily convert your investment back into your home currency, it's effectively illiquid. Then there's the revaluation timing. A pervasive myth is that a major revaluation is just around the corner, but credible officials have not confirmed any imminent, massive revaluation. In fact, many revaluation predictions have simply failed to materialize over the years. High transaction costs are another concern. Many diners brokers charge significant premiums when you buy, eating into any potential gains, and they might also impose high exit costs. And we can't forget the economic and political fragility. Iraq's economy is heavily reliant on oil and is subject to political and security instability. A currency's value depends on things like trade, inflation, and governance. And Iraq still faces challenges in these areas. Ultimately, investing in the IQD is purely speculative. You're not earning interest, you're just hoping for appreciation. Many experts consider it more like a collectible than a traditional investment. So, should you invest? Is it safe? The general consensus is not particularly, especially if you're looking for significant upside or a low-risk asset. Arguments for buying might include extreme optimism about Iraq's long-term recovery, potentially leading to modest appreciation. And if you operate or live in Iraq, holding IQD might make sense as a hedge. However, the arguments against are far stronger. High risk of illiquidity, no guarantee of revaluation, and better regulated investment options like stocks or bonds offer clearer fundamentals and liquidity. Much of the upside narrative is driven by hype, not concrete policy. Many experts view it more like buying a lottery ticket than a sound investment. If you still decide to consider it, please take precautions. Do your homework thoroughly. Use only licensed dealers. Avoid anyone promising guaranteed massive gains, and only invest capital you can afford to lose. Seriously, assume it could go to zero. Have an exit plan before you buy, and consider diversifying by investing in Iraqi stocks or businesses instead of just holding currency. Finally, watch for red flags. Promises of huge profits with little risk, guaranteed returns, or pressure to buy quickly are massive warning signs. The final verdict is that while the Iraqi dinar has a seductive narrative of hidden potential, the reality is far more sober. It remains heavily controlled, illiquid for many, and subject to economic and political risks. Experts consistently classify it as speculative. If you're treating it like a safe investment, you might be exposing yourself to considerable risk. View it more as a very speculative wager, not a stable investment. For clarity, liquidity, and stronger fundamentals, you might be better off exploring more conventional assets. The dinar could play a tiny role in a highly diversified portfolio, but only if you fully understand and accept all the significant risks. Remember, this information is for educational purposes only and not financial advice. Always consult a qualified financial advisor before making any investment decisions. If you found this breakdown helpful, please hit that like button, subscribe for more honest financial insights, and ring the notification bell so you don't miss our next video. Thanks for watching.